I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast. And again, we're coming to you with a good episode answering a question that we get a lot, especially around tax time, or heck, just about any time you're around a water cooler. And that's, I have this, I own a home, I have a mortgage, I get that mortgage write-off, interest write-off.
I get that mortgage tax deduction.
Yeah.
You know what that, you get one too, don't you there, Bob? Don't you, Jane? Everyone talks about that.
Write-offs, this mortgage interest. Yeah, it's the best thing ever. That's why you want to get a mortgage, is to pay off or to have a write-off.
Right. Oh, yeah, I owned a home when I was 5 because of the write-offs. I mean, you'd be ridiculous not to do it because of write-offs. I think everyone knows someone like that. And
Yes.
your head is spinning, whether it's at, a relative's reunion party or you're at a wedding, but they're talking about write-offs. Like, what the heck? So all we're talking about is the mortgage interest write-off. That's it.
If you pay a mortgage.
Yeah. If you own a home, you pay interest, you're going to have the ability to deduct it, also known as write it off.
Yes. So every year when you pay interest or your mortgage payment, let's just say you have 12 payments to your mortgage company in January, usually at the end of January, when you get your W-2 form from your income, you're going to receive a 1098 for any mortgage interest that you paid to the bank. Okay. So you get that mailed to you. That form will tell you how much interest you paid to them. And that's the amount that you get to tell the IRS, don't tax me on this amount.
That's right. So basically what the government said is, listen, if you make X amount, we're going to, charge you, we're going to charge you tax on that. But if you pay interest on a mortgage, you can actually take your X. You can deduct it with some other things. We're not tax experts, and you need to seek, CPA guidance and counsel. But basically, we're going to allow you to reduce the taxable income you have because you pay interest on a house. Yes. The government has really used the home as an incentive. They want people to, to have home ownership for various reasons. And one way that they incentivize is by putting money in your pocket.
And they just don't know. A lot of people just don't know how much money is going into their pocket. Sometimes they're overestimating or underestimating. We're just going to try to give 4 examples, 4 different people. And, these are just examples of their income and their loan amount size. And we're going to quantify the savings, the daily savings, what that looks like.
Right. So we're not really telling you and defining exactly what a write-off is and a deduction. All we're simply saying is we're going to quantify how much money that is.
Mm-hmm.
Because a lot of people, again, hear it. They don't know what it means. Is it two pennies a day? Is it 2 pennies a year? Like is it $8,000 a day? Like, what is it? So we're here to just kind of quantify it. And it's kind of fun. Okay. So the assumptions we use, and these are actually pretty good assumptions. These are, I think, right down the middle, basic assumptions based upon all the applications we take, that the profiles of these people based upon income are going to generate, a certain amount of interest that you're going to end up paying on your house. So the assumptions are, we have an interest rate of 4%. So the mortgages here are 4%. We have mortgages, interest rates lower than that today, but we're just using that as kind of a general number right now. The actual down payment on a house would have been about 5%. The housing, expense, or what they would have paid on a house is what is it? It'd be my monthly payment is about 25 to 30% of their income is what people typically spend for a house. So that was important. And then we're doing this on a daily basis on how much money you're going to save. So does that make sense? What I just said?
Yeah.
Okay. All right. So why don't you go into the first example?
Okay. So I have the first example is someone with a taxable income of $50,000. They're typically going to be in a 12% tax rate. Okay. That's what we're going to base this off of. They have a home that's about $208,000. They have a mortgage about $195,000. They pay really close to $8,000 in interest, right? Based off of that 4% that we're using it as, just the 4% as just an example. For $8,000 in interest to the bank, they save $950 a year, and that calculates to be $2.60 a day. And what can you buy for $2.60 a day? Tom's answer was his first answer was a 12 pack of soda.
12 pack,
And
yeah.
I'm like, dude, what kind of soda can you get for 12 pack for $2.60? That's some cheap soda.
And I told him you can go to certain retailers, and get a 12 pack for.
Yeah, it just might be 4 years old.
Yeah, that's right. For $3, maybe you're right. So we reduced it to a 6-pack. It's a 6-pack of name brand soda.
There you go.
A day, not a week, not a month, a day. Okay, and that $900 savings approximately is less money you have to pay the government. So basically, it was, hey, before the house, you had to pay us $960 dollars more in taxes. Oh, because you did the interest write off, you pay us $960 or whatever it was less.
$2.60.
Real money.
Yeah,
super real money. Okay,
7 days a week. It's just that's what your savings is.
that's your savings. Okay, so I'm going to jump to a person or persons making $75,000 of taxable income. Okay, they're going to be in a house of about $315,000 worth. They're going to have a loan just under $300,000. Their annual interest payment will have been close to $12,000 a year. So again, remember, we're taking the loan amount, we're multiplying by the interest rate. We're coming with that on an annual basis. Assuming the same tax bracket, 12%, they're going to have a tax savings. So this is less money to pay to the government every year, about $1,400. Okay, that equates to almost $4 a day. It's like $3.90 a day. What can you get for $3.90 a day? What's on everyone's desk? Dutch Bros or Starbucks every day.
Yeah.
Just because you have that mortgage interest deduction or write-off. So, okay, for the person making person making taxable income of 75,000, Dutch Bros. Person making 50,000, it's going to be a 6-pack of name brand soda a day. All right, you got the next one.
So next is someone with taxable income of 100,000. Let's assume that they have a loan amount around 395,000.
How much is their house worth?
I mean, it could be about 415,000.
Okay.
So again, loan amount 395, paying that interest, 4% would be around 15,800 a year.
Wow.
Okay. Now in this tax bracket or this category with $100,000 in taxable income, they'd probably be in about a 22% tax bracket. And that would save them about $3,500 a year, which is about $9.54 a day.
What can you get for $9.50 a day?
So we're really close to $10 a day in savings, and our answer was a 12-pack of beer.
Or you mentioned, is that 1 or 2 bottles of good wine?
It's a $10 bottle of wine today can be good.
Okay.
It depends. Like there are people out there like $10. I would never spend $10, and then there's other people who are like $10 is cheap.
Right.
For wine.
Okay. I like that. Okay, so a decent bottle of wine.
Yeah.
A decent bottle of wine for a person
every day, 7 days a week,
because you have that tax deduction. Okay.
Mm-hmm.
All right. The last example was someone making taxable income of $150,000. Okay. This person, based upon our assumptions, would be probably in a house a little over $600,000. They'd have a loan of just under $600,000, paying an annual interest rate of about $23,000 a year. So it really does escalate, with these bigger mortgages.
The annual interest they paid was $23,000.
23,000 a year. Yeah, almost some $2,000 a month. Yeah.
Mm-hmm.
Same tax bracket as their previous group, about 22%. So their tax savings is about $5,200 a year. So $5,200 less you would have to pay the government because of your big interest payment that you can write off or deduct. And what does that equate to on a daily basis? About $14.50 a day. Okay. And what can you get for $14.50 a day besides a lot? I'm saying 2 pizzas.
He proved me wrong. I said, Tom, where can you get two pizzas for $14?
Well,
he just goes right to the computer and Googles, I think, Domino's, and sure enough, right. It's like 2 pizzas, $7 a piece or something like that.
Right. Or if you want to, throw in some breadsticks, you can go to Little Caesars, 2 large pizzas, cheese or pepperoni, plus a side of breadsticks.
7 days a week.
Every day.
Yep.
Call up your kids. Hey, guess what, kids? Or call up your girlfriend or your boyfriend. Guess what? I'm going to bring home 2 pizzas every day. If we buy a $625,000 house and we put 5% down, and we pay 4% interest. So
Okay. That is an interest. So we have those four different examples and what the real dollar,
that's the point.
quantified savings looks like.
Quantified savings. So 10 years from now, you can be like, who are those guys that actually talked about those tax write-offs? Oh, I don't know who they were, but yeah, that was like a 6-pack of beer. That was a 12-pack, or actually a 12-pack of beer, 6-pack of soda. So just have fun with it. And again, it's ask your doctor friends, ask your lawyer friends, ask your teachers. A lot of people don't know.
Yeah.
They don't know what it is, and they certainly don't know how to quantify it.
Mm-hmm.
So
again, we're not tax experts, but again, you can go out there and look. You can look at look at your taxes, figure out what your tax bracket is. That's kind of that's not too hard to do. If you ever need any help, just talking about this stuff, brainstorming, you're thinking about a new mortgage. Tom and I and our team, that's what we're here for. And if you have questions, that's what we do every week. We try to answer your questions about mortgages.
That's right. All right. So give us a call, subscribe, unsubscribe, email, look online, whatever.
Comment on this, like this, and again, just reach out if you have any questions.
Awesome. Thank you, folks.
Thank you, everyone. Hey, guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.